The Dow dropped 300 points today. The Dow hit 40,000 for the first time. You hear it every single day. The Dow Jones Industrial Average is the most quoted, most famous number in finance. But here's the secret. The Dow is one of the worst metrics we have for understanding the broader U.S. economy. It's an antique, and it gives almost everyone a misleading picture of the market. In this video, we're breaking down exactly what the Dow is, why its calculation method is completely bonkers, and why you should probably stop paying attention to it. Let's dive in. So what is the Dow? Officially, the Dow Jones Industrial Average tracks 30 large, publicly traded U.S. companies. That's it. 30. It's an index with history, dating all the way back to 1896, created by Charles Dow. It started with just 12 companies and grew to 30 back in 1928, where it has stayed ever since. For over a century, the Dow has been the go-to barometer, but its age is actually its biggest weakness. It uses a methodology that has been largely abandoned by modern index creation. And this is where things get weird. The single most important thing to understand is that the Dow is price-weighted. What does price-weighted mean? It means the companies with the highest stock price have the biggest influence on the index, regardless of their actual size or total value. Think of it this way. In a standard market cap weighted index like the S&P 500, a $2 trillion company has twice the influence of a $1 trillion company. Makes sense, right? But in the Dow, a company with a stock price of $800 per share will move the Dow more than a $2 trillion company trading at $180 per share, even if the first company is 1/20th the size of the second. You could have giants like Apple and Nvidia in the Dow, but a smaller company like Goldman Sachs or Caterpillar, which simply have higher price shares, can actually move the entire index more dramatically. It's illogical. It's like handing out trophies based on who paid the most for a ticket, not who ran the fastest. Because of this quirk, the Dow often fails as an accurate reflection of the true health and value of the overall market. On top of the strange weighting, the company selection process is also highly subjective. For the S&P 500, there are strict, rules-based criteria for inclusion. The Dow? Not so much. A committee at the S&P Dow Jones Indices essentially handpicks the 30 companies based on reputation, growth, and representation of key sectors. There's no strict formula. Changes happen rarely, based on the committee's judgment of what's best fit. And finally, let's talk about the actual number, 30,000, 40,000, whatever it is. How is it calculated? They add up the 30 stock prices and divide by a special number called the Dow divisor. This divisor is constantly adjusted for things like stock splits or mergers. This means the number itself, 40,000, is totally arbitrary. It's not a point system. It's not tied to a measurable value. It's just the result of this old, convoluted formula. The truth is simple, habit and drama. The Dow plunges 500 points. Is a much better, shorter, and more dramatic headline than the S&P 500 is up 1.3%. The media loves the psychological impact of big, round numbers and large point moves, even if the actual percentage change is minor. But for a broader, more accurate, and more reliable picture of the U.S. economy, investors look elsewhere. They look at the S&P 500. The S&P 500 tracks 500 companies and is market cap weighted, meaning the biggest companies have the most influence. This makes it a much more comprehensive snapshot of the U.S. market. Historically, the S&P 500 has also been a stronger performer. Over the last decade, indexes tracking the S&P 500 have generally outperformed those tracking the Dow by a noticeable margin. It's why there are dozens of low-cost ETFs tracking the S&P 500 and only one major one for the Dow. The bottom line is this: the Dow is historic, it's symbolic, and it makes great headlines. But as a serious investor or an observer of the economy, it's not the most accurate reflection of the market. So the next time you see a headline about the Dow, you'll know exactly what it's telling you, and more importantly, what it's not. Focus on the broader indexes for a clearer, more grounded view. If you found this breakdown helpful, hit that like button and subscribe so you don't miss our next deep dive into finance. Let me know what other index we should cover in the comments below. Thanks for watching.